Welcome back to EDS, and in this video we're going to take a look at how you can write your own options contracts, collect a premium upfront and generate consistent returns year on year. So the first thing we want to do is pull up just any equities underlying in our brokerage platform. We want to navigate to where we can see a list of expiration dates for that underlying, and at this stage we want to lock in on an expiration date that we're going to use to mock up future positions. The expiration date that we're going to pick needs to be between 30 and 60 days out in time, and it also needs to be a monthly expiration date, not a weekly or quarterly. The only expiration date that fits that criteria at the moment is January 17th, which is 58 days out in time. So if we open up January 17th, we are presented with the options chain, but for right now we don't need to go that far. That is one step ahead. January 17th, 58 days out in time, that's where we're going to be at. Now we can take that information, come over to our watch list and filter out anything that has earnings over the next 58 days. The purpose of this is to filter out anything, any underlying that obviously is going to have earnings. Earnings will come along and increase volatility, mess up your deltas, and these things will have a negative effect on your P&L. So we want to avoid that. And we also want to filter out anything with a low liquidity level. We only want to be paying tight spreads, not wide spreads. We want to be able to get in and out of positions easy. And then finally, I personally like to list everything from high to low IVR. You don't have to do that, but it's just personal preference. Generally speaking, we want to be writing contracts on underlyings with an IV rank of 50 or higher, sometimes 30 or higher, but generally speaking 50 or higher. And that's pretty much it. You want to keep in mind what's already in your portfolio. If you're very heavy in any one sector, don't then open new positions with underlyings in that same sector. Keep things diverse, use common sense, and you'll be fine. And at this point, you just simply want to go down the list and see what looks good. Right now, MSTR is currently trading up just over 400. Well, it's trading at around $472. Obviously, their treasury is pretty much just Bitcoin. So it's in a way a proxy for the price of Bitcoin. Some may say there's a multiple on there, but we are product indifferent. We don't really care too much about what it is or why it's moving the way it's moving. We just need to pay attention to the size of the underlying, the IV rank, correlation to SPY, and the absolute IV level, which is 201%, which is crazy high right now. So MSTR, we could take a look at that, open up our trade tab. We're going to go straight to January 17th as we've already determined. And this is now the options change. As you can see here, we've got a super wide expected move. This orange bar here is the expected move. And that is obviously because of the IV level. It's currently at 180.6% for this specific expiration date. And at this point, we simply want to sell one call and one put. We want to sell the call and put anywhere between a 15 and 20 delta. In this case here, 890 is actually the highest or the lowest delta, or the highest strike with the lowest delta, I should say. Currently sitting at it's currently sitting at a bid and ask of $53 per share. I think if we just go one in a little bit, so 34 delta, that's as much as we can go. And then on the put side, obviously just make sure that you have got all of your strikes available in view. And on the put side, we have got a bit more of a selection. If we've got 34 deltas on the call side, we could just go with 34 deltas. On the put side, maybe a little bit lower down, that is kind of close to where the price currently is. Say if we were to go at the 25 delta, so we'd have an overall negative 8.66 delta, which is not bad considering what the actual underlying is doing right now. So we would collect a massive $11,757 upfront in premium, and we'd get just under $200, $194.76 to be exact. in daily theta decay. That will increase as time goes on, assuming all else stays equal. And our broker is going to require just over $35,000 in buying power to open this position. So a very, very nice return on capital. We've got a 60% probability of profit and 75%, 77% chance of hitting 50% of max profit over the next 58 days. So some nice probabilities there. However, $35,000 probably is too much for most accounts. So what you want to do is simply just buy another contract a little bit further down. It is $10 wide on the call side. So we could do the same thing, $10 wide on the put side. And as we can see here, we've got a very, very interesting trade setup now. So we can collect basically $500 up front, and our max loss is basically going to be another $500. So we've got a one-to-one risk to reward trade here, which is pretty uncommon in the option selling world, especially when you've got an over 50% chance of hitting 50% of max profit. So very, very good odds here. And that's basically how you can find and manipulate positions. This is more of a higher risk trade, in my opinion. However, it looks pretty good. As you can see, obviously, price has just been ripping recently. But yeah, this is how you can find and manipulate positions to fit inside your portfolio. If you want to know how much buying power you should be allocating to any of your positions, click on the link in the description, click on free position sizing template, and get yourself your free copy of this template. Just fill in the top two boxes here. Everything else will be calculated for you. Just follow that and you'll be fine. If you want to learn in more detail, click the link in the description. This time head on over to EDS Premium and get yourself signed up. You'll have access to our portfolios when you're inside, so you can see the positions that we're placing, the adjustments that we're making, how we're managing risk, all in real time. There's also a full course, so no prior knowledge is required. We will teach you everything you need to know. It is a private community, so you can speak with myself directly and with other like-minded individuals. There's also a 100% money-back guarantee. So once you have studied our full course and followed our trades for at least 6 months, if at that point you haven't seen results, then we will work with you for free until you do, or you can simply request a full refund. So it's completely risk-free on your part. And right now, it is only £1 a month to join. The price will be increasing. However, once you're in, the price is locked in for you. So you are definitely rewarded for getting in early. And with that being said, I will see you guys on the inside.